Hello everyone, good evening and welcome to today's session. So today we are going to continue our chapter number 7 and then we will start with the chapter number 8 in the second half. Okay, so let's do a quick revision of what we have discussed till now. What we have discussed till now in chapter number 7 is number 1, that we discussed about the format of the audit report, SA 700. Okay, we discussed about the qualifications in the audit report, modifications in the audit report, SA 705. We discussed about key audit matters, that is SA 701. Then we discussed about EOM paragraph and OM paragraph, SA 706. Then we discussed about other information and we discussed about corresponding figures and comparative figures, comparative financial statement, that is 710, 720. Okay. So we have discussed this much till now. Plus we have discussed on section 143, rule 11, reporting under rule 11, reporting under 143, 12, 13, 14 of the Companies Act. So we have discussed Companies Act portion till section 143, 13, 14, 15, and we have covered 143.3, we have covered rule 11, and we have covered reporting on specifically to the internal financial controls. Okay, we discussed on the part of that where the Caro is applicable, like what is the applicability criteria for the Caro. Now again, can anyone tell me what is the exemption criteria under the Caro, when the exemptions are available, or to which kind of company the exemption is available under Caro? Quickly. Anyone? No? We discussed this particular point in the last session, that in which scenario the exemptions under Caro are applicable. Remember?
Yes, sir.
Yes. Yes, yes, tell me.
Sir, can you please again ask the question?
So the question is, to which companies Caro exemption is available?
Banking companies, insurance companies, Section 8 companies, Section 8 companies, 8.
Then anyone else?
OPC and small companies.
Yes,
Yes.
very good. And there is one more exemption.
Private limited है.
But what are the conditions for private?
Paid up share capital, paid up share capital 1 crore, or borrowings 1 crore, and turnover less than 10 crore.
Yes. So we discussed, remember, about BIOS 8, that is BIOS 8, that is banking, insurance, okay, small company, OPC, okay, and then section 8 company. Then we had the private limited exemption, basically, which was again P1, D1, R10, that is paid up share capital less than 1, debt less than 1, and total revenue less than 10. Remember? So this was the applicability for the Caro, and for small company it was 440. That is paid up share capital less than 4, turnover less than 40. Then only it will fall under the category of small company. So till this we discussed under the Caro. Now what we are going to do is we are going to start clause by clause discussion under the Caro. Okay, clause by clause discussion under the Caro, like, okay, which particular items requires which particular type of disclosure. I hope you have already read with the Caro. So basically it will be then, easy for you to understand, and it will be, you will be able to ask the doubts under each of the paragraphs. Okay, so let's start discussion. Now, basically, when it comes to the Caro, para 3 of that order specifies the list under which, okay, or you can say the items for which the auditor is required to report. So wherever the Caro is applicable, para 3 of the Caro will talk about, okay, which are the items where auditor has to comment. We will see with the example also. We will pick up one live example, okay, which is there in the public domain. And on the basis of that example also, we will understand how the reporting under Caro is done. Okay. So let us see the para 3 of Caro. Just a minute. It is on your page number 7.67 of your study module. Okay. Now, the point number 1 means para 3.1 of Caro. When we read, it is para 3.1. Okay. This is para 3 and this is para 3.1. So para 3.1 or clause 1 of para 3 of Caro talks about whether the company is maintaining proper records with respect to plant, property and equipment. So basically clause 1 basically covers on the plant, property and equipment, immovable properties. If you see, all the points pertains to your plant, property and equipment. Like the first one is about the records, whether proper records are being maintained or not. Second, again, proper records, but for the intangible assets. So in the first one, we have PPE. In the second one, we have intangible. Okay. Then the third one talks about the physical verification. Now it deals with the physical verification, plus it talks about whether the management is actually conducting the physical verification at the reasonable intervals. Now, reasonable interval has to be interpreted with respect to the size of the fixed asset that is there. So let's say, for example, telecom industry or telecom company. The fixed asset in a telecom company are huge. Manufacturing entity, fixed asset will be huge. In that scenario, the reasonable interval will be a such interval where, the company is able to cover majority of their fixed asset within the year. So now that totally depends upon what is the reasonable interval for them. So for example, they can do a monthly physical verification of certain plant, property and equipment. They can do quarterly, they can do one full annually. But the point is they have to do plant, property and equipment's physical verification to identify material discrepancies. So the target here is to understand whether is there any material discrepancy, and if yes, then they have to report. Like auditor has to understand and report whether they have been appropriately dealt in the books of accounts or not. Simple example: during physical count, they identified, okay, fixed asset worth of, let's say, 10 crores are missing or they are damaged, but management did not pass any entry to that effect or booking a provision or for diminishing in the value of the fixed asset or something like that. Management did not reduce the value of fixed asset till the year end. In that case, we can say that material discrepancies were noted, but they were not properly dealt in the books of accounts. So we need to not only talk about physical verification, but beyond physical verification, the outcome of the physical verification is something that is required to be understood and that is required to be posted in your books of account, and that as an auditor you have to report. Okay, now we will see one example of Caro reporting, where we will also will discuss point by point reporting part also. Again, do not focus on the name of company. Okay, so see, this is the annexure B of the audit report. Basically, if you see, it talks about reporting on Caro. Okay, so point number 1, which is clause 1 of para 3, which is there. What they are saying here is the company has maintained proper records showing full particulars, including quantitative details and situation of the plant, property and equipment. So what they are talking about, not only maintain proper records, but quantitative details and the situation of PPE. like in what condition it is. Second, with respect to intangibles, company has maintained proper records showing full particulars of intangibles. Now, this is the third one, which is reasonable interval. We'll read. The company has a program of verification of plant property and equipment so as to cover the items once in every 3 years, which in our opinion is reasonable having regard to the size of the company and the nature of its assets. Pursuant to the program, certain items of plant property and equipment were due for verification during the year and were physically verified by the management during the year. According to the information explanation given to us, no material discrepancies were noted on such verification. Now, what they are saying here is once in every 3 years, like they need to cover all the items once in every 3 years, and that is reasonable. So the definition of reasonable will differ from company to company, from sector to sector, industry to industry. Clear with this? Then the next point is whether the title deeds of the immovable property, other than the properties where company is a lessee or it's a lease agreement, whether those title deeds, okay, are disclosed, like which are disclosed in the financial statement, are in the name of company. If not, then they have to provide the detail of that. So usually when any immovable property is being purchased, it should be in the name of company. If it is not in the name of company, then you need to provide the details about that particular property. For example, you need to say what is the description of the property. You need to provide the gross carrying value, which is there in your balance sheet. You need to provide the name under which it is held, whether promoter or director or relative or employee that person is. For example, that person could be a director, that person could be a promoter. So from which category the person belongs, in whose name that the property is. For example, there is a land in name of Mr. X, which was purchased by company. Now that is shown in the books of account, in balance sheet of company, this land, because company made the payments. Okay, so what we will show for this land? So description of property is a land X kind of. Okay, gross carrying value, let's say whatever value it will be, let's say 110 crores, held in the name of Mr. X. Who is Mr. X? Mr. X is a, let's say, director. Period it held indicate range, like since when you are holding that particular property. Okay, so since you can write since date of purchase or whatever period it is or range it is. Okay, so let's say it is in the name of from 1980s to 2024. Now, reason for not being held in the name of company, why it was not purchased in the name of company, why it is being purchased in the name of a director or a promoter, something like that, you need to specify that detail over here. And then this is required to be given for each and every immovable property which is not in the name of the company, and you have disclosed that immovable property in your balance sheet. Now this is except or other than the finance lease or property on lease. Now let us see how reporting under this clause is actually done. So if we read, with respect to the immovable properties other than the property where company is the lessee and the lease agreements are duly executed in the favor of company, disclosed in the standalone financial statement, included in the plant, property and equipment, and according to the information and explanation given to us, and based on the verification of the registered sale deeds, transfer deeds, conveyance deed provided to us, we report that the title deeds of such immovable properties are held in the name of company and at the balance sheet, except for the leasehold land as disclosed in note 1.7 to the standalone financial statement, in respect of which the allotment letters are received and the supplementary agreements are entered. However, lead deeds are pending execution. So if we'll go to note 1.7, you will get the detail on that particular property. And if they have provided the reason also why it is not in the name of company, because allotment letters are received, but the lease deed is pending execution. Otherwise, for all the cases, everywhere it is, in the name of company. Clear with this? Any doubt? Any doubt? Okay, no doubt. Let's go and then proceed to the next clause. So the next clause is whether the company has revalued its plant property and equipment or intangible asset or both during the year. And if yes, then whether that revaluation amount, okay, which is done by the registered valuer, whether that revaluation amount or the change in the amount is 10% or more for that particular class. If yes, then you need to provide the detail. Means when there is a revaluation which is having a change in 10% or more in the net aggregate value of that particular each class, okay, of plant property and equipment or intangible, in that case you need to disclose that particular detail over here, that which property it was, okay, when it was revalued, before amount before revaluation, amount after revaluation, change, and that particular detail. So in case of revaluations, this is required to be given. When there is a no revaluation, then you need to state, okay, there was no revaluation. Okay. So by this way, you need to report the details of the revaluation of plant property and equipment and intangible in this paragraph. Clear? Any doubt? Okay. Then we have next point is whether any proceedings have been initiated or pending against the company for holding any benami property. Okay. Now, if there anything is there, then you need to report that, okay, whether there is any proceedings that has been initiated or pending against the company for holding any benami property. Okay. And whether that has been disclosed by the company in their balance sheet or final notes to account, because now Schedule 3 requires disclosure on the proceedings initiated or pending against the name of company for the benami property under Schedule 3. Like if you go to the Schedule 3 revised version, you will be able to see that it's a part of the amended Schedule 3 that where companies are required to report this. So one, you have a Schedule 3 which says that, okay, you need to report. On the other hand, you have a Caro where auditor needs to verify whether the company has reported the same or not. So by this way, a dual, side, you can say responsibility has been placed. I'll show you one. Let's see the examples how these things are reported. Okay. Based on the records examined by the based on the records examined by us and information and explanation given to us by the company during the year has not revalued its plant property and equipment, intangibles, hence the requirement of this particular part is not applicable. Fine. According to the information and explanation or representation given to us by the management, no proceedings have been initiated or pending against the company for holding any benami property. Okay, so again, there is nothing to report. And if you see, they have one thing to report on the details of plant property and equipment not held in the name of company. Okay, so over there they have provided like freehold land. It is title deeds in the name of this particular company, because the company got merged with this particular company as of this particular date. So they have provided property held since which date, kind of, the inception date. So this is how the reporting is required to be done. This was your whole clause number 1, which was with respect to plant, property and equipment, or you can say fixed assets. Clear? Again, here also, if you see in another example, there is nothing for the revaluation and there is no proceedings. So they have specifically specified that, okay, there is no proceedings. So this is how we can report under clause number 1, which is with respect to plant, property and equipment. Any doubt with this clause? Any doubt? Any doubt, guys? Yes, no? No? Okay. If no doubts, then let's discuss.
Excuse me,
Yes.
sir. I have sent one doubt in chat box.
Okay. Explain the meaning of benami property. So, okay. Basically, when it comes to the benami property, there is a benami transaction prohibition act. Over there is a definition given of the benami property. They have, in detail explained what is a benami property, which properties can be, termed as a benami. Basically, these are the properties which are, held in the name of persons who are either not there, either they are dead or they are the fictitious person. The real owner's name is not there in that particular property, or the person whose name is there, like they are kind of, fictitious person.
तो सर वो प्रॉपर्टी तो फिर गवर्नमेंट के अंडर भी जा सकती है ना?
But let's say, for example, if that property is being, managed by or held by, what you say, the company, or the company is somehow, working on that particular property, or they have that property in somehow linked to them.
Okay.
For example, I'll give you one hypothetical example. Let's say there was a land on which there was a huge factory built up, and that is since ages. That property is being used by that particular company since ages on that particular land. Now the factory is there, the company is running that factory, but when you go and check the title deeds, you will not able to find any detail about the title deeds or under whose name the land was there. Because some of the land, let's say in some rural areas or somewhere, you might be able to find that difficulty that in whose name the land was there, because you might not find the proper documents in the local municipal corporation or whatever authorities there who are handling the documentation for the title deeds. See, till now, not all the thing has been done digitalized, or what you can say, not all the property documents are digitally available.
Yes, sir.
Still there is something which is physically available. So there were a lot of issues when digitalization was done, that physical documents were not there, or purposefully physical documents were not maintained to hide the real owner of the property. So for that, this particular transaction is, or this particular act is.
तो सर ये यानी इस तरीके का यानी इलीगल नहीं कहा जाएगा फिर ये, कि यानी कोई डॉक्यूमेंटेशन नहीं है, किसी का नाम नहीं है, और यानी इसको बेनामी प्रॉपर्टी कह के यानी
That is, yes, that is, a person should not hold a benami property. That's why, if there is any proceedings or, has been initiated against the company, or any, proceedings is pending against the company, that is required to be reported.
yes sir, clear sir.
Any further doubts? Any doubts? Okay, if no doubts, let's proceed. Yeah. The second one is with respect to, the clause 2 is with respect to your inventory. Okay. Now what it says, whether physical verification of inventory at a reasonable intervals by the management, okay, is done or not. And if it is done, then any discrepancies which have been identified, that is 10% or more of that particular class of inventory, is properly dealt or not. So you need to provide first up about the physical verification of the inventory, whether that is done at the reasonable intervals or not. Second, the procedures performed during such verification, physical verification, are appropriate or not. Third, discrepancies more than 10%. Fourth, whether they are appropriately dealt or not. So in one particular clause itself, you have 4 different points to report about. Okay. One, your physical verification. Second, your reasonable interval, like physical verification at reasonable interval. Second, your coverage or procedures, you can say. Third is about the discrepancies. Fourth, about the impact, or dealing the discrepancies in your books of accounts. So whether these discrepancies are properly dealt or not. So these are the 4 points that are required to be reported for inventory. Okay, clause 2A of para 3. Now tell me one thing, under which particular topic we discussed about understanding the inventory and testing of
As a
inventory.
501. As a 501.
Yes. Now over there you have already covered physical existence of the inventory part, that you will verify physical physical count performed by the management, instructions performed by the management. Okay, how the count is being done, who is performing the count, whether he is the independent person or he is the one who is the warehouse manager. So remember, we discussed a lot of things in that particular lecture. So when I talk about the procedures, that same thing you need to report it over here. So if you have any qualification over there, any misstatement over there, any lack you have identified over there, that will come over here also.
Then sir, why we have to record it double in SA 501 also and here also on Caro?
Reason because, see, sometimes what happens is, let's say you might have not identified misstatement, perfectly fine. But tell me one thing, if I have to classify the physical verification done by a management, if I have to classify this particular process, what I will call this one? Like, let's say this is a process where management is doing a physical verification. Okay, what is that particular process can be called? Can I call it a control, internal control? Physical verification by management is an internal control or not?
Yes, sir, internal control.
Correct. Now, internal control can fail. They might not be properly designed, or they can fail. They were not operating effectively. But that means, is there a misstatement? So failure of control, you may not report because at the end you might not have identified a misstatement. But when there is an inventory failure, control failure, that you will report over here, even though when there is a no misstatement.
And sir, this discrepancy of 10% is in the value or in the quantity?
No, you need to consider in the value.
If the value, then we have to apply the valuation, then we have to calculate the 10% deviation from it.
Yes. See, at times, if you have a quantity, okay, usually when I talk about a class of the particular inventory, okay, now what will happen is, usually your price and your quantity percentage will be same. For example, if I talk about 10% of the quantity, it is the same class. It is not the mixed inventory, but the same class. So 10% of the quantity somehow will become your 10% of the value of that particular class also. Are you getting the point?
Okay, sir. Yes.
And still any doubt?
But sir, if there are more than मतलब कि ज्यादा अगर इन्वेंट्री है तो फिर कैसे निकालेंगे इसको, पर्टिकुलर प्रोडक्ट वाइज निकालेंगे फिर इसको?
No, you need to see for each class of the inventory. Now, there could be, multiple categories that you might have created for your inventory items. Like, okay, this is the packing materials. This is the raw material, but you can say very fragile raw material. This is something other than, not a raw material, but you can say some other material, like this way. If you have a certain classes of inventory, okay, so for that particular class, you need to check. Or
Okay, sir.
another
Sir,
thing is,
in days two, we have to first apply in days two. Then how the cost and the NRV of the product has been calculated by the management, and if there is any discrepancy of more than 10%, then we have to report.
see, by default, what will happen is, let's say, for example, when you are doing a physical count, at that particular point in time, you will get a report from the management, which will cover your inventory at the count level and at the amount level. It will always be there. Now, the question is whether that valuation is correct or not. Okay. That is a separate story. That whether valuation is correct or not, you will perform some different procedures to understand whether the valuation is correct or not. But when you do a count at that particular point in time, okay, you will be easily able to identify when there is a discrepancy, whether the discrepancy is more than 10% or not of that particular class.
Okay, sir, got it.
Because if there is a problem in the valuation, it will impact the entire class. It will not impact a particular item. Okay. Let's say, for example, management did not use cost or NRV. Then it will be for the whole class. They will, go for wrong for the whole class, not a particular item of the inventory. So, when we calculate 10%, it will not change the value, even though there is a, wrong valuation method adopted by the management. It will again, be more than 10% only if you identified earlier.
Yes, clear.
सर इन्वेंटरी का ये जो आपने प्रोसीजर बताया, ये सारा प्रोसीजर हम ऐसे 501 में भी करते हैं, और ऑडिटर भी यानी काउंट करता ही है ना? यानी काउंटिंग का प्रोसीजर ऑडिटर भी करता है। तो वहां पर जैसा कि आपने कहा, अगर वहां पर हमें कोई भी यानी मिस स्टेटमेंट रह जाता है तो फिर यहाँ पे हम उसको रिपोर्ट करते हैं। तो फिर वहां पे यानी फिर वहां पे लैग कैसे मैं यानी थोड़ा
See, okay, I'll tell you. Now, understand two separate things. One, physical verification done by management. It is a control activity.
Yes, sir.
Physical verification done by auditor is a substantive testing.
Yes, sir.
Now, control failure may not result into a misstatement.
Yes, sir.
But when you do a substantive testing, if you identify something, let's say while physical count, if you identify some discrepancies, that is a misstatement.
Yes, sir.
We are talking about here on the control part. Now, let's say control failed, but when you did your substantive testing, no misstatement was identified. Will you qualify your report? Control failed, your substantive testing did not give you any misstatement. Will you qualify your report?
No, sir.
No. Yes, no, we will not qualify our report. That is correct. But still you will report under Caro that the physical verification is not conducted by management at reasonable intervals, or their procedures are not sufficient because the control failure.
Now clear, sir.
So both are different.
Yes,
It
sir.
can happen that, both, let's say, for example, control also failed and you also identified misstatement. Then it will be reported at both places. But there could be a scenario where it could be, only one where you have not reported under your audit report, but you are reporting under Caro.
Yes, sir. Clear. Thank you, sir.
Any further doubts? No? Okay. Then the point number B means clause 2B talks about if the company was sanctioned for a working capital loan, which is more than 5 CR. So here we have a trigger point that if it is more than 5 CR, 5 CR working capital limit, then, and that is too on the basis of current asset as a security. So most of the time when the bank or any financial institution provide a working capital limit or facility, or any such facility to the company, they take either debtors or inventory or both or the whole of current asset as their collateral or security. Against that, they issue the limit. Now, what is the requirement at that point in time is bank asks the company to submit the quarterly returns or the statement of current asset, inventory, or trade receivables with the bank, so that bank can check the drawing power. When we will go and test the audit of banks, at that point in time again we will come back to this area. But as of now, remember that from the point of view of company, when the company is required to submit the statement, okay, and then you need to check as an auditor that whether those statements are in agreement with the books of accounts or not. So company submitted these statements, but it were not as per the books of accounts. In the bank audit chapter, we will talk about the drawing power. But here we are talking about from the point of view of company, same transaction, but from the point of view of company, whether those statements are in agreement with the books of accounts or not. And these are the quarterly statements. So whether first thing is quarterly statement filed by the company or not. Second, if filed, then whether they are in agreement with the books of accounts or not. Quarterly statements and their agreement. So that is the point number 2. Now let us see this particular reporting requirement in the audit report that is there. So here we have that the inventories, except for the goods in transit, were physically verified during the year by the management at reasonable intervals. In our opinion, and according to the explanation and information given to us, the coverage of such procedure of such verification by the management is appropriate, having regard to the size of the company and nature of its operation. In respect of goods in transit, majority of the goods have been received subsequent to the year end. No discrepancies of 10% or more for each class were noticed on the such physical verification. So there was no discrepancies, procedures are fine, everything is fine. That they have reported in their audit report. Now, for next paragraph, according to the information and explanation given to us, the company has been sanctioned working capital in excess of 5 CR for sure in aggregate and at the point during the time from the banks on the basis of security of current asset. So current assets basis 5 CR, more than 5 CR working capital limit sanctioned, perfectly fine. Now what they are saying is, in our opinion and information explanation given to us, and as disclosed in the notes to standalone financial statement, the quarterly returns were filed by the company with such banks are in agreement with the books of accounts of the company of respective quarters. Now, this particular requirement, reporting requirement, is on the company also. So when you will go to and see the schedule 3, you will identify there is a reporting requirement on the company to report about this particular matter. They have done in note 21.5. So if I go on 21.5, just a minute. (21.5). Okay. Here it is 21 and 21.5. Sorry. If you see, that has been reported over here by the management itself, that in respect of the working capital loans, quarterly returns on the statement of the current asset filed by the company with the banks are in agreement with the books of account. So the same thing is also reported in your financial statement. Okay. And working capital loans, they have provided other details also on the working capital loans, like what is the working capital loans are. So working capital loans from the bank of this much is are secured by the hypothecation of the present and future stock of raw material, work in progress, finished goods, storage, spares, everything is there. Okay, save and accept stock and receivable of oil and gas segment, which is there in the note number 9. Working capital loans from other are secured by the government securities. So they have provided the details on the working capital loan in 21. Okay, note 21, 21, 1.1 and 5, and that has been referred by the auditor when it was in the Caro. So if we go back to the Caro, over there, they have referred back to this particular note. So wherever you have the information available in your financial statement, you have to refer back to that particular information in the financial statement. Clear with this? Clear with the your para 2? Oh, sorry, para 3, clause 2. Okay. If no doubts, let's proceed to the clause 3. Clause 3 basically talks about your investment, okay, and loans and advances. So what clause 3 says is that whether during the year, whether company has made any investments, guarantees, security, or granted any loans and advances, okay, which is secured, unsecured to companies, firm, limited liabilities, or any other parties. So whether during the year company has granted any of the amount to any other person or any other company, firm, or LLP. If yes, then you are required to provide detail for each such category. Now, what are those details that we need to understand? Okay, and there will be certain critical terms that we need to understand about these particular details. Okay, so the first thing that we need to understand is for if company has provided any loans and advances. Now first we will focus on the loans and advances. Loans or provided or advances that is given, okay, in the nature of loans or guarantee or any security to any other entity. Okay, now this is not applicable to the entity whose principal business is to give loans. Means they are talking about that it is not applicable to NBFCs. Okay, NBFCs are not required to report over here on this particular paragraph. But if that company is not an NBFC, in that case, if they have provided any loans or advances, in that case, what they are saying is aggregate amount during the year that was given, balance outstanding at the balance sheet date of such loan granted to subsidiary, joint venture, and associate, means related party. So first thing they are asking is your amount, total amount, aggregate amount, your balance outstanding, and if you have given, then to whom, like subsidiaries, joint ventures, and associate. So given to related party. Which related party? Second, they are asking again aggregate amount outstanding at the balance sheet date with respect to parties other than related party. So same thing, but now this time we are talking about other than related party. Balance outstanding and given to other than RP, related party. Okay. Point number third, whether the terms and conditions are prejudicial to the interest of the company or not. Now, what is this? Basically, when the loans, advances, or securities that are given, so the terms and conditions are in the favor of company or are harmful for the company, that is prejudicial for the interest of the company. If it is prejudicial to the interest of the company, means if it is harmful for the company, then you need to report. Can anyone tell me what could be the harmful terms and conditions for the company? Examples of harmful terms and conditions for company?
Higher interest rate.
For the company, for the loans in advance given.
Okay, charging the lower interest rate.
Yes. Interest-free loans. Loans without any repayment schedule.
And the loan written off can also be example.
So any such terms and conditions which are prejudicial to the interest of the company, in that case, you need to report that. So here we will report about terms and conditions. C, in respect of loans and advances in nature of, again, loans, whether the repayment of principal and interest has been stipulated, which has been stipulated, is done or not. So they are here talking about your repayment of principal and interest. Whether that is being done on a timely basis or not. Now, if that is not done on the timely basis, means principal repayment or the interest repayment is not done by the company to whom the loans were given. In that case, you need to report in point number D. What do you need to report? You need to report the amount that is overdue. Okay, what is the amount which is overdue? Okay, and that is more than the 90 days. If the amount is overdue, then what is the amount overdue more than 90 days? And whether the steps were taken by the company or not to recover that amount. Okay, so again, what is the amount overdue for more than 90 days? And then reasonable steps taken. These are the two things that are required to be reported.
Sir, this 90 days limit is taken from the banks, where the banks declares the NPA if the repayment is not done.
90 days limit is taken from
banks, because banks declares an NPA account if there is a default of more than 90 days.
No. Overdue means here, like here we will not follow the provision of NPA and all that thing. Here overdue means the amount was supposed to be received on 10th of January based on the repayment schedule. We have not received, overdue. Clear?
Yes, clear.
Basically here, when it comes to the overdue, we need to check it from the day when it was supposed to be paid and that was due, and when we have not received. If we have not received, it will become overdue. Any doubt? No? Okay. So overdue and the steps that is taken by the company to recover the same. Point number E, whether any loans or advance in the nature of loans granted. Okay. Whether any loans and advances in the nature of loans granted which has fallen due during the year has been renewed or extended, or fresh loans granted to settle the existing loan. This particular criteria or this particular transaction is known as the evergreening of loan. Okay, this is known as the evergreening of loan. That means you give a new loan to the person so that he can pay the old loan. For example, I gave a loan of rupees 10 crore to Mr. A. Now, what Mr. A did is, Mr. A was not able to pay the 10 CR back to me. What I did is, I gave additional 10 CR loan, new loan to Mr. A, and asked Mr. A to pay me back my old loan. So if that is the scenario, if that is done, if you identify this kind of scenario, then specify the aggregate amount of that particular loan that has been renewed, refreshed, or settled by the fresh loan, and percentage that the loan which is given, that is the percentage to the aggregated loans and advances which has been given. Okay, so you need to provide two things. If that scenario, if evergreening of loan is there, then you need to give aggregate amount of that loan. Second, you need to give the percentage. Now, how will you calculate the percentage? You will take the aggregate amount and you will divide it by the total loans and advances. Okay, that has been granted during the year. Total loans and advances which has been granted during year. That is the percentage you are required to provide. Okay, so that is something with respect to the evergreening of loan. When evergreening is there, then only you are required to provide, otherwise not. And point number F, basically, which talks about when the company has granted any loans or advances in the nature of loans, then in that case, is there any terms specified for the repayment? Or are they repayable on demand or without any terms? If they are repayable on demand or without any terms, means the terms of repayments have not been specified. In that case, you need to report that particular amount. But okay, when we are talking about reporting that amount, okay, you need to report that whether this particular amount, okay, that has been reported or granted to the promoters or related party, means they are talking about if that loan is given to the related party or not. If yes, then you need to report that particular detail. Okay, so loans to related party without terms. Now, there's a definition of relatives, like related parties under section 276 of the Companies Act. You need to refer to that particular definition. And what you are required to provide is, again, aggregate amount and the percentage. And the percentage. These are the two things that you need to provide. Clear? Any doubt with respect to this 3A, which is with respect to investment guarantees, securities, or loans and advances? Any doubt with respect to 3A? So this is 3A, and 3A has two parts, A and B. Then you have a 3B, 3C, everything. Okay. So 3A, B, C, D, E. There are 5 clauses. Any doubt in any one of them? No?
Can you please explain again the evergreen loan?
Evergreening of loan means that, let's say, for example, I gave a loan to Mr. A in 2020. So because of XYZ, today he's not in condition to pay me back. Today the loan is getting due in 2024. I gave him for the 4 years.
Yes, sir.
Okay. Now that loan is getting due as of today. So if he will not pay me the loan, I have to show everywhere that the loan is due and overdue, and this person has not paid the amount. It will also come into the financial statement. So what I do, I decided to give 10 CR a fresh loan for next 4 years to Mr. A. What I will say to Mr. A is, Mr. A, take this fresh loan. Now you pay me this fresh loan that I'm giving you in 2024 back in 2028. But what you do is, by taking this 10 CR loan, pay off your old loan.
ओके, यानी नया पुराने लोन को पे करने के लिए नया लोन लेना. ओके.
Yes.
यस सर.
What will appear is in the current year, I have given a loan which is due in 2028. But in actual, that is the older loan which has been evergreen, means it has been renewed by providing a fresh loan.
सर अगर नया लोन किसी सिस्टर कंसर्न से लिया हो तो
हाँ,
सर नया लोन रीपेमेंट करने के लिए किसी रिलेटेड पार्टी, उस कंपनी की रिलेटेड पार्टी या कोई सिस्टर कंसर्न से लिया हो तो क्या होगा?
then there is another point where you will report. We have discussed already that one. Where? Think there is one more area where we have reported this kind of transaction.
ऐसे 550.
No. No? Okay. Remember something we discussed in the rule 11. There were two transactions: funding party, intermediaries. Remember in last lecture we discussed.
Yes sir.
Over there, what was the scenario is someone like the second scenario where you are the intermediary and there was a funding party. Okay, or there could be some other funding party or intermediary, means someone is telling you to pay the amount because you are giving the amount to that particular company with an instructions, means the company is paying to someone on someone else's instructions. That is something where it will get captured.
सर कारो में रिपोर्ट नहीं होगा ना फिर?
No, it will not come in that particular clause of Caro, but it will be reported under Rule 11, this particular point. And it will be reported in Caro of that particular entity where that particular loan has been given.
Okay. Yes.
See, some company is already giving a loan. Okay. Now, if that company is giving a loan to a particular person, in that case, what will happen is in that particular company's Caro, it will be reported. And let's say, for example, that company is giving loan on instructions of some other company. Then in this particular point also, it will get that reported that they are getting or they are paying on the instructions of some other funding parties.
Yes, clear sir.
Okay. Any further doubts? Okay. Then the next point comes is very important. That is para 3 clause 4 that talks about that whether you have given loan to director or whether there has been loans or investment by the company. Okay. Basically, it talks about two important sections. That is section 185 and 186. What it says that whether the criteria for the 185 and 186 has been complied or not. Okay. So you have to check when the loans, investment, securities that has been given, then at that point in time, whether section 185 or 186 has been complied with or not. So you need to see the compliance of these provision at the time of when the company is providing a loan. So if that particular compliance is not done, in that case, you need to report it over here. What is 185? Anyone?
The loan to director.
That is fine. I have written. But what is there in the loan to director? Like, what is the requirement of that section? Anyone? Loan to director, what is the requirement? No?
Sir,
So
on what term the loan has been given to the director, and what will be the repayment schedule, and at what interest rate it has been given?
yes, yes. Basically, what happens is if you read section 185, it again talks about, first of all, it says that, the company should not provide a loan by way of a book debt to a director, okay, of a company or a holding company or a relative or partner of such holding company or something like that. All those things are covered. So first they, block the book debt concept. Like, okay, on the book you are giving a loan. Second, if there is a company that is, that has been loan has been given by the book debt, then you need to pass the special resolution. Then whether the loans that has been, given is something from the loan that has been borrowed for business purpose, from where the funds are there. A lot of things are there in that particular section. So that section basically, governs the loan that has been paid to the director, from where it is paid, special resolution, from where the funds are coming, and restrictions on loan to be given to the managing director, whole-time director, all that stuff. When you see 186, okay, that is a loan and investment by the company. That particular section again, place the restrictions on the investment beyond 2 layers. So layering concept comes into the place. Then again, that, they talk about like loan should not be given to any person or any body corporate unless and until, there's a criteria: 60% of the paid up share capital, free reserve security premiums, or 100% of free reserves or security premiums. Again, that put up the requirement for your resolutions and notices and everything. So there is a lot of requirement given in 185 and 186 that should be complied when a loan has been given. Loan, investment, or securities. Clear? Any doubt till now? Okay. If no doubts, let's go and see what was there in the audit report, how it is reported, like the clause 3 and clause 4. So first we'll see the clause 3. The company has made investments in and provided guarantees, loans and advances to companies, firm liabilities, limited liability partnerships, and other parties during the year. So first one, point number A, when the loan has been given, loans and advances has been given to related parties. So what they are saying is agreed amount of loan provided to subsidiary, joint venture, that is a loan, that is a guarantee. Balance outstanding, that is a loan that is the balance outstanding of the guarantee to subsidiary and joint venture. Okay. So and point number B was to other parties other than the related party. But what they are saying is company has not provided advances in nature of loans or security to any other entity during the year. So that is like to only related party, but not no one is there for the other than the related party. Then the next point. Okay. Then your whatever investments or guarantees provided, their terms and conditions, whether that is prejudicial to the interest of the company. But here they are saying no, it is not prejudicial to the interest of the company. So fine. Again, repayment. So they have checked on the repayment that the schedule of the repayment of principal and interest has been stipulated and regular payments are being received. Fine. In respect of loans granted during the year, there is no overdue amount remaining or outstanding. No loans were granted by the company that were fallen due during the year, like evergreening part. So there is no evergreening. And according to the information and explanation given to us based on the audit procedures performed, company has not granted loans either repayable on demand or without specifying the terms. That is also done. And 4 number is that whether 185, 186 was complied or not. So company has not granted loans or provided guarantees to parties covered under 185 with the act. Company has complied with the section 186 because they have provided the loan to subsidiary in joint venture, so they have to comply with the 186, but they have not given any loan to director, so 185 is not applicable. This is how they have reported the matter. Let me see if I have one more example of this particular point where we could have, further reporting. Just let me see. Okay, yeah. So over here in this particular company, they have given loan without specifying the terms of repayment. So they are saying that, okay, based on our verification of records of the company has granted loans either repayable on demand or without specifying the terms. Repayable on demand to all parties. Agreement that does not specify the repayment of terms to related parties. Total and percentage of loans and advances in nature of the loans to the total loans. So when you identify any such loan where the terms of repayable means terms of repayments are not given, this is how you need to provide the details, like to all parties, to promoters, to related parties, and then the percentage of total loan. I might not have any example with respect to evergreening of loan, because usually no one does any particular thing which is, if there is any evergreening of loan is there which is reported by the auditor, so management before getting reported they rectify everything, so they do not provide any such evergreening of loans. So for that I might not have an example to report. Okay, then again with respect to 185 186, here also in this example they have complied with the 185 and 186, so they have written okay, they have complied with the provision of 185 and 186. Okay, so that was your point, clause number 3 and clause number 4 of Caro. Now coming to next clause, clause number 5. Clause number 5 is with respect to your deposit. Okay, so you need to check when it comes to the deposit, you need to check that in respect of the deposits, okay, like which has been accepted by the company. Now we are talking about deposits being accepted by the company. Okay, now there are directions issued by the Reserve Bank of India. Okay, or there are other regulations and rules prescribed under Companies Act with respect to the acceptance of deposits. Now, whether these particular deposits are being, accepted by complying with the directions issued by the Reserve Bank of India or by complying with the provisions of the Companies Act. So there we are required to check compliance with the provisions of the Companies Act and compliance with the RBI norms. If not, then if there is a contravention, then such contravention is required to be reported. Okay. And if there is any order passed by the Company Law Board or National Company Law Tribunal NCLT or CLB, okay, or Reserve Bank in this behalf, then whether the same was complied or not. Sometimes you get a this particular order passed by the CLB or NCLT to refund all the deposits because the conditions were not complied with. In that case, whether the company complied with that particular order and refunded all the deposits, or they are still yet to comply. So that thing you are required to report under this clause. So two things: one, compliance of deposit, compliance part with respect to the deposit accepted. Second, compliance with the order. And this particular clause basically talks about your deposits accepted. Clear? Any doubt? No? Okay. Then the next point is about maintenance of cost records. So if the central government has specified under section 1 of section 148 of the Companies Act that the company is required to maintain cost records. So whether in that case, whether the company has maintained the cost records or not. So you need to specify, you need to report on the cost record maintenance under clause 6 of para 3. Clear? Pretty straightforward, nothing difficult over here. Now coming to clause 7, which is one of the important clauses, because each and every company has something to report under this. So each and every company has something to report under this. Okay. Now what that particular clause says, clause number 7. So clause number 7 talks about whether the company is regular in depositing first undisputed statutory dues. Undisputed means there is no dispute at all in any of the case. If not, then you need to provide arrears or outstanding dues that is undisputed as on the last day of the financial being outstanding for the more than 6 months from the date they become payable. So first of all, you need to report whether they are regular in depositing statutory dues like GST liability, provident fund, employee stays insurance, income tax, sales tax, customs, your excise, your other cess or any other duty that is applicable to you. Now second thing is, if they are not regular, means there should be outstanding or arrears, or there might be scenario that they were not regular but they paid on later side. For example, like let's say GST was not paid on 21st of a particular month. It was rather paid after 2 months. So there could be a scenario that they were not regular but there is no outstanding. So you need to assess whether only the regularity part is the issue, or with the regularity there is a outstanding arrears also. So outstanding statutory dues, if there are any outstanding statutory dues, and when I talk about outstanding, that should be more than 6 months. Outstanding for more than 6 months from the date when they become payable. Now, when I'm required to count, let's say statutory due that was supposed to be payable in the month of January, that became more than 6 months overdue in the month of, let's say, June, and they did not pay till June. Am I required to report? So in that case, answer is no. Reason because the timeline of the 6 months or less than 6 months or more than 6 months, I'm required to check as on balance sheet date. So if on the balance sheet date it was not more than 6 months, I'll not report. Even though in actual later on they did not pay, that is another story. So if on the balance sheet date it was not more than 6 months, then I will not report. If on the balance sheet date it is more than 6 months, then I will report. So more than 6 months as on balance sheet date. Remember that.
Sir, it means that if it is due less than the date will be the 30 September. अगर 30 सितंबर के बाद इससे पहले का है तो रिपोर्ट होगा, वरना रिपोर्ट नहीं.
Yes. Absolutely. You can say that, like, on, let's say, if I go back from 31st March, 6 months, if anything was becoming due before 30th September and it was not paid, okay, then 6 months will go closed, get closed on the 31st March, and then it will be more than 6 months.
But sir, अगर कंपनी 6 months से ही पेमेंट करती है जैसे पीएफ के ड्यूज का, then
no. So 6 months from the date when it becomes payable due means, let's say if something is payable in 6 months, okay, I'm not required to pay on a monthly basis. So when the 6 monthly liability will become due, is after completion of 6 months. From that particular day, I am required to count the next 6 months.
From that respective act when it is become due. Okay.
So the date when it will become due is the date I need to count. Okay, it was outstanding and it was not paid. From there, I need to start the calculating 6 months period.
Yes, I got it.
That is 7A. When I talk about 7B, clause 7B, it is on the let's say undisputed part. Okay, so which we are reporting under 7A. But if some portion is disputed, means there's a litigation going on. There's a some amount I have not paid. There's a demand notice. I have not paid that demand because of XYZ reason. Litigation is going on. So in that case, I need to provide the details of that dispute. Now, what is the details of that dispute? I need to provide number one, that is the amount of that particular due. Second, forum where it is pending for the adjudication. For example, ITAT. For example, NCLT. For example, some securities apparent tribunal, whatever. Okay, so the forum where it is pending, we usually also provide a period. It pertain to which period? Okay, or since when it was due. So that is something we provide. Along with that, we provide the nature of outstanding. Nature means that what kind of due that was. So if I have to show you one example, let me show you one example.
Sir, I have a query.
Yes.
ये सर जैसे बोनस एक्ट के अंदर बोनस का पेमेंट करना है लेबर्स को, बट वो डिस्प्यूट है और वो डिस्प्यूट जो है भी कोई फोरम में फाइल नहीं हुआ है, मतलब तो फिर वो रिपोर्ट हो गया यहाँ पे?
डिस्प्यूट कहाँ पे? डिस्प्यूट
किसी भी फोरम में फाइल नहीं, एनी फोरम?
No, then it is not a
internally
dispute.
Okay.
Then I will not even call that as a dispute.
वो
Dispute
mutually
means the
consent से हो
pending
जाता
is the matter is pending for adjudication before any authority.
है. Yes. Okay.
Even a simple, that's why there is specifically guidelines given that even a mere declaration or a letter submission to any particular authority is not a dispute.
It has to be filed.
Yes. So the proper, so let's say for each and every law, each and every authority has a mode for the appeals. Okay, you have a particular way how to file an appeal at the CIT level. You have a particular way how to file an appeal for the NCLT. So for each and every category, there is a way to file the appeal or dispute. Till that time, you are not complied with that particular way, or you are not complied with that particular mechanism, it can be said that there is no dispute. So I'll show you one example. See, this is one of the company. Again, do not pay focus on the name of the company, publicly available data. Now, if you see how it is given, name of the statute, nature of the dues, amount, period which relates, and the due date. So see the dues which are disputed. Okay, this is the disputed. What is the nature of due? What is the amount? What is the period? Where it is pending? So everything is given over here.
तो सर ये भी 6 months से ऊपर का होना चाहिए?
No, this is we are talking about disputed part. In
Means
point number,
in the balance sheet date जो कुछ भी dispute चल रहा है वो कितने भी years पुराना है वो चलेगा, वो report होगा इसके अंदर ना?
yes, usually you don't have a dispute within 6 months. If you see the trend, you will not get a dispute that it was within 6 months time frame.
एंड सर डिस्प्यूट तभी माना जाएगा जब वो अपील के अंदर हो, या फिर जैसे सीआईटी अपील्स में जा रहा है तभी माना जाएगा इनकम टैक्स का डिस्प्यूट?
No, any authority. It is not necessary that it should be beyond CID appeals and over, or it is at the tribunal level. No, with any authority.
सर जैसे कोई डिमांड नोटिस आया वो भी डिस्प्यूट माना जाएगा?
No. So see, if there is a demand notice, the demand notice is a liability for you to pay. When it will be a dispute, when you challenge that demand notice.
Yes.
If you do not challenge, it becomes an undisputed statutory dues.
Yes.
Any doubt with respect to this one? I'll show you one more example. See, again here also. Name of the statute under which the dispute is, nature of dispute, amount, period, and forum where it is pending. So this is the way we actually report the under this particular clause, the disputed cases. Trust me, you will find a lot of old disputes also. See. So hardly we say that, any dispute is there within the 6 months. Like you will, whenever it's a dispute, usually it is beyond 6 months, and that is being reported over here. Clear? Any doubt?
सर ये डिस्प्यूट्स का पता कैसे लगेगा कि डिस्प्यूट चल रहा है?
So there are two ways to identify dispute. Okay. There is one particular topic that we discussed. Okay, one particular topic that we discussed on the similar lines, like on similar thing to identify the dispute. Which one was that?
501 litigation.
Yes. And what was the thing that we were supposed to do in the litigations?
Is there any pending litigations which has not been brought into the notice of the auditor by the management?
So we were supposed to check the completeness, unreported litigations, remember?
And objectivity, integrity of management to check if there is any fraud factor.
Yes, yes. So over there, we were supposed to check about the litigations under SA 501. Now you might have already complied. When you comply with SA 501, you have already performed procedures to identify such kind of litigations. Okay. Now my role under SA 501 was on the completeness of the litigation. Means to identify all the litigations which are there. Remember we discussed like how we will identify by reviewing the legal expenses, by seeing the legal expense bill. See, whenever there is a litigation, either you will hire a legal person or you will take a legal advice. You can identify them from legal expenses also. There are correspondence. You have a portals now for income tax. You have for GST. You can ask management personnel to show you on the portals if there are any outstanding reflecting over there. If there is any, let's say for example, there is a dispute which management has not provided to you. Trust me, you can also identify from the website of the court. So over there, sometimes, you can just go and check, is there any dispute listed for adjudication by the searching the name of that particular party or company's name. So that is, you can identify in the cause list or everything that is there. If it is matter is pending before any authority for being heard. So from there also you can identify from review of minutes of meeting, something, all those procedures are there from where you can identify the completeness of the litigation. Once you are comfortable with the completeness of the litigations, you have to report it over here.
And sir, वो litigation contingent liability के रूप में भी आ रहा होगा ना बैलेंस शीट में?
Yes.
Yes.
Either it can be, if the management is sure that we might not be able to win the litigation, they will have a provision. If management is not sure, they might have a contingent liability. See, in most of the cases, when you go at the tribunal level, or sometimes at the some authority level, you are at least required to pay 20%, 30%, or 10% of the amount under protest. So whenever such amount is paid by the company, you will always have a bank entry for that. From that bank entry also, you can correspondingly identify why this amount was paid to this authority. So you
Yes,
can
sir.
identify that some cases of dispute from there also, if not being disclosed. Any doubts? No? Okay. If no doubts, what I propose here is let's take a quick 10-minute break. After the break, we'll gather back and we'll continue the session. So what we will do is after the break, we'll start with the clause number 8 of para 3. Okay. Let's take a quick 10-minute break. Yeah. let's continue the session. So we have discussed till now, till point number or clause number 7. Now we will discuss the clause number 8. Okay. So clause number 8, what it talks about? It talks about if there are any undisclosed income which has been surrendered. Okay. So any transaction not recorded in the books of account which has been surrendered to the income tax, which was not disclosed previously, then for that undisclosed transaction, you are required to provide the details in this particular clause, clause number 8. So basically, it is kind of, undisclosed income where you are now disclosing, or that has been now given under any scheme of income tax for the disclosure purpose. Okay. Yes. So for that particular, if company is opting that particular scheme, if company is disclosing such transactions, then you need to report in this particular point number 8 of Caro. So basically, I will call it as a undisclosed income. Okay. Then point number 9 or clause number 9, basically. Clause number 9 talks about default on repayment of loans. Okay. Basically, it is talking about the defaults that has been made. If company has defaulted in making repayments of loans or other borrowings, or any repayment of interest, so default by the company with respect to the interest, repayment of loan, or on any of the borrowings, in that case, the company has to disclose the detail in clause number 9. I have a good example to disclose. I have a good example to show also for this particular clause. Okay, but let's see what is required to be disclosed first. If there is a default, then you need to provide nature of the borrowing, name of the lender from where you are taken, the company has taken the money, amount not paid, whether principal or interest, which is outstanding for payment, number of days of delay, and remarks why it has not been paid. So for the default, this is the thing that is required to be reported. Then the next point with respect to the default only is you need to disclose if the company is a willful defaulter, or if the company is being declared as a willful defaulter by any bank or financial institution. Again, when it comes to declaration of the willful defaulter, we'll see in the bank audit sector that when the bank declares anyone as a willful defaulter. Then comes the utilization part. Whether the loan that was taken for any purpose, when we are taking any term loans, okay, we provide why we are taking to the bank. We disclose the purpose, like it is for the expansion, it is for the working capital loan, or it is for investment or something like that, acquisitions, merger acquisitions, whatever it is for the new project. Then in that case, whether the loan was used for that purpose or not. So purpose utilization is something you are required to check for that loan. Then comes is whether the funds raised for the short terms, whether these funds have been applied for the long term. So short term being applied for the long term. See, problem is if you apply short term funds on the long term projects, you are not going to get returns so easily. You are not going to get your funds back on a short term basis because you have applied on a long term loan, long term project. Now, if that has been applied on a long term project, what will happen is you might not be able to pay that funds back. So that's why reporting of short term to long term is there. That if any short term loans were applied for the long term purposes. Then comes the next point, which is on the reporting of basically loan that has been taken for the holding or subsidiary company. Okay. So if the company has taken any funds from any entity or person to meet the obligation of the subsidiaries, associate, joint venture, okay, then in that case you need to provide the details. So let's say, for example, there is a company, my subsidiary company, which is facing a lot of cash crunches, or which has a lot of problems in repayment of their loan. So as a holding company, what I did is I took a loan from the market. Okay, and I provided that funds to the subsidiary so that the company, the subsidiary company, can meet its obligation or loan obligations or loan payments. In that case, I need to specify in this particular clause of the holding company that yes, the company took the amount and paid it to its subsidiaries. Okay, and that is holding company taking loan for the subsidiary, that you need to report over here. Then comes the point F, where if the company has raised the loans by pledging the security of the subsidiaries, joint ventures, associate companies, then you need to provide the detail for that particular transaction where they have pledged the securities. Also, you need to report if there has been default on such repayment of loans. So, usage of security, or you can say pledge of security of subsidiaries by holding. Pledge of securities of subsidiary by holding and default. Okay, so these are the points that you are required to report under clause 9. Number 1, default, then the details of default. Number 2, willful defaulter. Number 3, purpose utilization. Number 4, short term, long term. Number 5, holding company taking loan for subsidiary. Number 6, pledge of securities of subsidiary by holding and if there is any default. Now let us see example how it is being reported. So this is clause 9. So first, default in the repayment of borrowing and interest, if there is any default. Then name of the lender, amount not paid, whether it's a principal or interest, if it is both and both, and the number of delays unpaid. Number of days where the amount is standing as unpaid as on 31st March.
सर इसको बैंक से भी वेरीफाई करना होगा कि कितना अमाउंट ड्यू है, कितना इंटरेस्ट ड्यू है?
Any which ways you will do. Reason because this is your liability. It will appear in your balance sheet. For that, you will already perform your procedures to check the balance of your liability.
Yes, clear.
So this was with respect to the borrowings. This is with respect to the working capital loans, cash credits which are outstanding. This is borrowings from others, promoters or group entities, not only financial institutions, but other end promoter group entities from where the amount is pending. That is unpaid amount. Okay, so that is the detail as of amount as of 31st March. The above details of the interest default to the banks and institution is exclusive of this much amount. Means interest is not this much interest is not included above. The above details of the interest default to the bank and financial institution is exclusive of unrecognized interest is this much. Default and resumption of optionally convertible commutative redeemable preference share of this much. Refer note 50 and 52 of the standalone financial statement. So this is another default which is not reported above. Then whether the company has been declared as a willful defaulter. So company has not been declared as a willful defaulter. Company has not taken during any loan. So that was remember after willful defaulter, there is another thing is whether the loan was taken then the purpose. Okay, that whether that has been applied for the purpose or not. Then it was short term, long term. So on overall examination of the financial statement, funds raised on short term basis have not been used for the long term. Then you have the payments made to subsidiary and loan has been taken by the holding company. Okay, so company has not during the year taken any funds from any entity to meet its obligation of its subsidiary or joint venture. So that is also not there. And the last one was the pledge of shares of subsidiary by holding and if there is any default. So company has not raised any loans during the year by the pledging the securities. So this particular reporting is not also applicable. Kind of yes, Ginny. These are points where you can say this is material uncertainty. But again, we need to see, amounts like whether the amounts are of that much nature that it is actually causing a material uncertainty or not. Just to provide you the details on your question, in this audit report itself, there is a material uncertainty related to the going concern paragraph, which talks about uh, companies' potential liabilities in the normal course of business. Okay, so they are talking about there is something, liabilities on the company. So that is supposed to be paid. And they are also talking about resolution process and the steps taken by the reconstitution board. So yes, on the basis of that, they have identified material uncertainty already under SA 570. Auditor has already reported material uncertainty. Clear?
Yes, sir. Clear.
Yeah. Now coming to the next particular part, that is a clause number. Sorry. Clause number 10. Okay. Now what clause 10 talks about? Clause 10 talks about basically your IP or FPO. Okay. Whether any money was raised on the IP or FPO during the year. Now, if yes, then whether they were applied for that purpose for which they were raised. And if not, if they were not applied, if there's a delay and subsequent rectification, if there's that is there, that after some delay they applied the fund for the purpose. In that case, you need to report that delay and the rectification. So IPO, FPO, their deal and the purpose for their application. Now, from where you will get the purpose for the IPO, FPO?
The prospectus, RHP.
So in prospectus, you have why they are raising the funds. Okay. Again, now that was for the IPO and FPO. Point number B talks about preferential allotment or private placement. Okay. Or convertible debentures other than the IPO, FPO. Okay. So there, point number B talks about preferential allotment, private placement of convertible debentures or shares. Now, in that case, if the company has complied with the requirements of section 42 or 62, then again you are required to talk about the purpose. If the purpose is not being complied, then amount involved and the nature of non-compliance you need to provide.
Sir, QIP भी इसी में आएगा?
हाँ?
Sir, QIP, Qualified Institutional Placement भी इसी में आएगा?
Basically, if I talk about QIP, it will fall under preferential allotment, if I'm not wrong.
Okay.
But again, I need to check whether QIP will fall under the preferential allotment or not. But most probably, I think it will fall. Any doubt? Any other doubts? I will write it over here. So I'll check for the QIP ones. Okay.
Okay, sir. I will also check.
Okay. Then point number 11, with respect to the fraud. Okay. Now, is there any fraud by the company or on the company? Now, this is very important. Fraud by the company. By the company means company conducted the fraud with any of the customers, any of the vendors, or any other person. Not within the company, but fraud by the company plus on the company. So you are required to report both. So first is the fraud reporting by the company on the company. Second, you are required to speak about whether any report has been submitted, that is form ADT4 under subsection 12 of 143.
सर 1 करोड़ का लिमिट यहाँ पे भी एप्लीकेबल होगा? सर जो 1 करोड़ का लिमिट है ADT4 के लिए फ्रॉड रिपोर्टिंग के लिए, तो वो यहाँ पे भी एप्लीकेबल होगा क्या?
Yes, yes. The reason because ADT4 you will only file when there is a more than 1 CR.
नहीं बट सर पॉइंट ए में लिखा है ना whether any fraud by the company. तो सर एनी में
So
तो कोई भी अमाउंट आ गया
in point A, it is any fraud. It is without amount. But in point B, when I talk about ADT4, it is more than 1 CR.
Okay, sir.
So when I talk about point A, it talks about any amount. So over there, the 1 CR limit of 143.12 will not be applicable. Then in point number B, it will be applicable because it is talking about ADT4. And ADT4 is beyond 1 CR. So over there, it will be by default applicable. So any ADT4 has been filed by the auditor, then you need to report it over here. And third is about whistleblower. That whether auditor has considered any whistleblower complaints or received during the year. If any, then you need to provide the detail.
Section 177 will be applicable, under which the vigil mechanism is there.
So if that is a part, yes, let's see. 177, what is 177 says? That you need to establish vigil mechanism. Okay. If that vigil mechanism is being established and by that mechanism you are receiving any whistleblower complaints, then that will form part over here.
Okay.
Now vigil mechanisms can be multiple natures, and but the point here is that you have received any whistleblower complaints. Sometimes without having any mechanism, still you get whistleblower complaints, anonymous letters that being directly sent to auditors or something like that.
Okay.
So that will cover point number C. If there is any whistleblower complaint that has been considered by the auditor. If yes, then you need to provide the details. Let us see the reporting under these paragraphs, like how it is done, okay, in the Caro. Basically, if you see, IPO FPO is pretty much straightforward. If I talk about IPO FPO, I have this report which will cover IPO FPO. Okay. So for IPO and FPO, if you see how it is being reported is, in our opinion, money received during the year towards unpaid calls related to the right issues of the equity shares in the earlier year have been prima facie applied by the company for the purpose for which they were raised. The company has not raised money by way of IPO or FPO through debt instruments. During the year, company has not made any preferential allotment or private placement of shares or convertible debentures. Hence, reporting in this particular clause is not applicable. Now, coming to the reporting by fraud, that is the point number 11. Yeah. So, how it is reported is, during the course of our examination of the books of accounts and other records of the company carried out in accordance with the generally accepted auditing practice in India, no material fraud by the company or on the company by its officers or employees has been noticed or reported during the year, nor we have been informed of such cases by the management under the report. Then B number, no report under subsection 12 of 143 has been submitted or filed in form ADT4. And point number C, as represented to us by the management, there are no whistleblower complaints received by the company during the year. So this is how you need to report in 10 and 11. Now coming to point number 12. Point number 12 talks about Nidhi companies. So if a company is a Nidhi company, then they are required to comply with the requirements of the Nidhi company. Now what is these requirements? Basically, these requirements are like NOF ratio. The point number 1 talks about whether the net owned funds to the deposit ratio is 1:20 to meet out the liabilities. Second, maintaining 10% of unencumbered term deposits. Okay, that is specified in the Nidhi rules. Third, is there any default in the payment of interest? So if there is a default, then you need to report. Basically, it is applicable to only Nidhi companies. If the company is not a Nidhi company, in that case, this will not applicable to that particular company. Okay. Then comes the point number, your 30. What is 13? It is about the related party transaction and the disclosure of which is required to be done under 177 and 188. So if there is a related party transaction, then you need to comply with the requirements of 177 and 188. 177 audit committee, if the approvals of the audit committee are required, and 188 is a related party transaction itself. Okay. So if applicable, then whether these sections have been complied with when these transactions were entered. If yes, then you need to provide the detail. So how it is reported, if I show you. See, in our opinion, and the company is in compliance with section 177, 188 of the Act, where applicable, for all the transactions with related parties, and the details of the related party transactions have been disclosed in the standalone financial statement as required by the applicable accounting standards. So reporting on related party transaction is your clause number 13. Clause number 14 is about internal audit. So whether the company has the internal audit which is appropriate or which is as per the size of the company, size or the nature of the company. Okay. And second, whether the reports of the internal auditor for that particular period were considered by the statutory auditor or not. Now, already this is something we check under SA 610. When you are using the work of internal auditor, at that particular point in time, you check the system of internal audit. Okay. Now, what is the internal audit team, their capabilities, competencies, objectivities, everything you check under 610. So these requirements are already being verified. Just you need to report it over here whether that particular internal audit system or internal audit team, okay, is as per the size of the company or not. And second, the reports. Clear? Any doubt till now? Any doubt? No? Okay. No doubts? Okay. Now, this was your 14, para 14. Coming to para 15. Para 15 talks about non-cash transactions with the director. If there are any non-cash transactions which are entered with the directors, in that case, you need to report about those transactions. And number two, they talk about whether the provisions of section 192 has been complied with or not. Now, what is section 192? Section 192 basically places restriction on non-cash transactions with the director. So that particular sections lays down like, okay, no company shall enter into any arrangement with a director which is related to a non-cash one. Like, all the conditions are there. So section 192 basically specifies or provides a restriction for the non-cash transactions with the directors. And that you have to report over there. That even though if non-cash transactions has been entered with the directors, then whether section 192 of the Companies Act have been complied with or not. So if I show you one example.
So non-cash transaction is book entry?
No, not basically book entry. Non-cash transaction can be with respect to the acquisition of the assets for other than cash. Exchange, barter system also can be a non-cash transaction.
Okay.
For example, company is giving one asset, taking one asset. So how it is reported is, like, in our opinion, during the year, company has not entered into any non-cash transactions with its directors or persons connected with its directors, and hence provisions of 192 are not applicable. Clear? Okay. That was your 15. Clause 15. Clause 16 now. Clause 16 basically is applicable to NBFCs. When we will see audit of NBFCs, again we will refer back to this clause. Reason because at that time you will be able to understand in much more detail. But as of now, understand is clause 16 talks about NBFCs. So first point is about being registered with the RBI. So section 45 IA of the RBI Act provides the criteria for the registration. Okay. So in that case, whether that registration is required, and if yes, then it has been obtained or not. Number two is about the authorization of the activities. Now, if the company is a NBFC or a housing finance activity or carrying on housing financing activities without a certificate of registration, then you need to report that, because every company who is meeting the criteria which is there in the section 45 IA or the directions we will see, if they are complying or if they are falling under that category, then they have to compulsory obtain the registration. If not, then they cannot enter into an activity or they cannot do or conduct any NBFC activity. So the point number B talks about, if you are conducting any activity of non-banking financial company or housing financing activity without a valid certification of registration, in that case, you need to report. Number 3, if the company is a CIC, that is a core investment company, okay, then whether it is fulfilling the criteria of being a core investment company or it is exempted or unregistered core investment company. So there are categories of core investment company and there are RBI directions on the CIC. So there are certain categories of CICs which are required to register. There is a category of group CIC, then CIC with the net owned funds of more than this amount. So certain CICs are required to be registered. CICs having net owned funds below a threshold are exempted. So they are known as either exempted or unregistered CICs. So you need to compare in that scenario whether the CIC is required to get registered. So if it is fulfilling the criteria, if not, then what category of CIC it is. Then point number D is on the group CIC. Whether the group has more than one CIC as a part of the group of companies. If yes, then the number. Now, what is the purpose of core investment company is? Core investment company is kind of a holding company which invest in their subsidiaries and obtain the shares of subsidiaries. So you can say holding company which is more into dealing of, holding the equity shares, holding other kind of securities of the subsidiary companies or making the investment. So that is a core investment company. And if a group has more than one CIC, because each and every CIC has to obtain a certificate of registration and they are allotted a number, that CIC number. So if there is more than one CIC as a part of the group, then they need to report. So I'll show you if I have one example. Yeah. So see here, the company basically the provisions of 45 IA are not applicable. So that is not there, fine, because this is not a NBFC. Again, not required to obtain COR because not an NBFC, perfectly fine. Company is not a CIC, perfectly fine. But as represented by the company, the group has more than one CIC companies at the part of group, as per the definition of the group contained in the CIC Reserve Bank of India directions. And there are two CIC forming part of the group. So they are specifying that how many CICs are there. If there are more than one CIC.
सर ये जो लेयरिंग वाला कॉन्सेप्ट होता है ना कंपनी एक्ट में, कि 2 लेयर तक इन्वेस्टमेंट कर सकते हैं, तो वो कोई सीआईसी से रिलेटेड है क्या कॉन्सेप्ट?
No, CIC is basically a concept for the RBI.
ओके.
And layering concept, basically it comes under the company set. So when we will see the audit of NBFC, now over there we will discuss when it comes to the classification of a NBFC. One such classification is based on the scale, that is a scale-based regulations that are applicable. One such classification is based on the activity of the NBFC. Like for example, holding companies. Over there, we will see, that kind of classification. So that is a classification that is something running by the RBI side. Now, when you come to the layering requirements, that is something under the company set.
Okay, clear.
Okay, so that is your point number or clause number 16, which is NBFC related. Clause number 17. Clause number 17 comes into the picture when the company is incurring cash losses in the financial year or immediately preceding the financial year. There you are required to provide the details of those cash losses. If the company is incurring the cash losses. So, for example, I'll show you this example. The company has incurred rupees this much CR of cash loss during the financial year and this much CR in the immediately preceding financial year. So if there is a cash loss, you need to report that cash loss.
तो कैश लॉस का मतलब क्या, थेफ्ट हुआ क्या? तो कैश लॉस का मतलब क्या हुआ?
Basically loss in cash terms. It is not something, you need to remove the adjustment which are non-cash transactions.
जैसे थेफ्ट से थोड़ा ना मतलब वो थेफ्ट हुआ है तो वो उसको थोड़ा दे देते हैं.
Actually, your voice is breaking. Can you repeat your question again?
ये सर ये जो 70 करोड़ का कैश लॉस हुआ है तो ये थेफ्ट थोड़ा ना है सर, ये थेफ्ट थोड़ा ना मानेंगे इसको.
This is not theft. This is basically like what is a cash loss? That when you do a transaction, when you do a business, okay, most of the time you have a loss. Let's say, for example, I'll show you here also. If you see over here, this is the total profit and loss before tax. Okay, this is the profit and loss before tax. This is your loss. This is not the cash loss. But when you go to operating cash flow statement, now this is net cash from the operating activities. This is something you can relate to the cash loss, because this contains only cash items. Now this is a loss that you have incurred from the operating activities. That is a cash loss that is being talked about.
Okay.
Again, there are some elements over here also that like from below you will classify to above to identify actual cash loss, not only operating activities but other activities also, other business or revenue activities.
सर ये मेनली कैश फ्लो से पता लगेगा ना, कैश फ्लो स्टेटमेंट से.
Yes.
Okay.
So it is something, you can say similar to this one also. Like for example, here it is 72.58 of net cash loss in the operating activities. Over there, if you see, the cash loss was 70 CR. Something, on the similar lines, because some other adjustments are also there. Okay.
Okay.
Now, coming back to the particular point. Wait. Then after this, you have next point is very important. If there is a resignation by statutory auditors during the year, then whether the auditor has considered the issues or objections and the concerns raised by the outgoing auditors. So if there's a change in the auditor during the current year, then that change is required to be reported over here. And the reason for the change is also required to be reported over here. I might have one example. Let me check, because very rare case scenario, but again, might have one example. Let me check. No, I don't have. Yeah. So usually it is like no resignation of the statutory auditor. If there is a resignation, then you need to provide one, the details of the same. Then point number 19 or clause number 19, which talks about on the basis of the financial ratios, have you identified any material uncertainty? Okay. Have you identified any material uncertainty, like based on the financial ratios, other parameters, other information, knowledge of the auditor, or information provided by board of directors? Have you identified any material uncertainty? And if yes, then how you are sure that the company is capable of meeting its liabilities existing at the balance sheet date or within 1 year from the balance sheet date? Basically, it's a going concern assessment that you are about to, you are required to report upon as per SA 570. Whatever you have done in your going concern assessment under SA 570, that particular detail is required to be reported over here. Okay. If I show you one example, see, on the basis of financial ratios, aging, expected dates of realization of financial assets, payments of financial liabilities, other information, and that is there based on our examination, and this there is a significant reduction in the company's income from the operation in absence of new business orders and other matters stated in note number 30 to the financial statement. In a pure opinion, there exists a material uncertainty that which casts a significant doubt on the company's ability to continue as a going concern, and therefore it may not be able to realize its assets, discharges liabilities, including potential liabilities in the normal course of business. The ability of the company to continue as a going concern is solely dependent on the finalization and approval of the resolution plan, which is not wholly within the control of company. This particular paragraph, yes.
सर ये मेन ऑडिट रिपोर्ट में भी आया होगा नहीं इसके लिए पैराग्राफ?
I have seen this particular paragraph, and if you see this paragraph of material uncertainty is the one. Like company's ability to continue going concern, therefore may not be able to realize its assets and discharge its liabilities, including potential liabilities in normal course of business. The company's ability to continue as a going concern is solely dependent on the finalization and approval of the resolution process, which is not within the control of company. Again, attention is invited to note 30. So, because you have identified material uncertainty in your audit report, you are also required to report the same in Caro.
सर ये जब ऑपरेटिंग कैश फ्लोज भी नेगेटिव है तो ये भी एक रीजन हो सकता है ना जिसके कारण हम कह सकते हैं कि गोइंग कंसर्न अफेक्ट हो रहा है.
Because these are the indicators. Negative cash, you have a cash losses, you have other operating parameters which are on the negative side. So there can be multiple things which can, like default in the loans. Already you have certain parameters in your Caro only, like default, then you have fraud, then you have this one, cash losses, then you have, material discrepancies sometimes in your fixed asset or inventory. A lot of things are already there in your Caro which can identify towards your material uncertainty when you will answer the questions which are required to be given under the Caro.
Yes, sir, perfect.
So this particularly is linked with Caro, your 19, clause 19. Okay. That was clause 19 of your Caro, which is about going concern assessment or material uncertainty related reporting. Clause 20 is about CSR. What is CSR? Now, what is we are required to report under CSR? So, other than the ongoing projects which are there, whether the company has transferred the unspent amount that was supposed to be transferred as per the calculations under the CSR, okay, in a fund which is specified under Schedule 7, like within a period of 6 months. Now that's the requirement of section 135 subsection 5. Okay, so to comply with that, whether the company has transferred or not. If not, then you need to provide the details, and if yes, then also you need to report it that the company has transferred. So CSR project amount which is unspent as per the requirements of section 135.5. That is the point number 21, 28. And 20B talks about, again, same, any amount remaining unspending on the ongoing project. Now, till now, we were talking about other than the ongoing projects. But here we are talking about on the ongoing projects for which there is a special account. Okay, you are required to open a special account and you need to comply with the requirement of subsection 6 of 135. So whether the company has complied with those requirements or not. If I show you the response, how it is given. See, the company has fully spent the required amount towards the CSR and there is no unspent CSR amount for the year, requiring a transfer to a fund specified in this schedule. With respect to provisions of 135 of the Act. Accordingly, the reporting under this particular clause is not applicable. So if there is any unspent amount, then only you are required to report. Otherwise, you have to mention there is no unspent amount. That was your clause 20. Now, the last clause, clause 21. But if you see, there is no clause 21 over here. You will not be able to see clause 21 over here in any of the report, because your clause 21 is applicable to your consolidated financial statements. When you do an audit of a consolidated financial statement, at that point in time, that clause 21 comes into the picture. Otherwise, all the reportings are till clause 20. Now, what is clause 21? Clause 21 talks about that is there any qualification or adverse remarks in the respective Caro reports of the companies which are being consolidated. Now, if I show you, so I'll go to the consolidated financial statement audit report. Annexure A, Annexure B. Okay, now Annexure B only talks about, see, point number, clause number 21 of paragraph 3. Okay, they talk about that, okay, with respect to this particular paragraph 3 and 4 of the company's auditor audit report order 2020 issued by this, according to the information and explanation given to us and based on the Caro reports issued by us and the auditors of respective company included in the consolidated financial statement to which reporting under Caro is applicable, as provided by management of the parent, we report that in respect of those companies where the audit has been completed under 143 of that, there are no qualifications or adverse remarks by the respective auditor in Caro reports of the said company in the consolidated, except for an associate. This is Sterling and whatever name is there related to point number or clause number 9A. So if there are multiple non-compliances, then you are required to report. So just give me a minute. I have one particular example to show. Yeah. Again, this is C, para 3 of clause 21 of Caro. Now, again, they have specified the name of the company, SIN number, what is the status of the company, holding subsidiary, associate, and under which clause of Caro there is a qualified or adverse remark. Para 3, which clause? So company by company, you have to provide the list. If you are doing a holding, audit of consolidated financial statement, and you are required to issue the Caro on that. So you need to provide company by company which is being consolidated and the clause number on which there is an adverse remark.
नहीं सर, सीएफएस की कारों में केवल पॉइंट नंबर 21 ही आएगा, और जिस जिस पर्टिकुलर कंपनी में कोई भी क्वालिफिकेशन है तो उसको हम टेबुलर फॉर्म में रिपोर्ट करते हैं.
Yes. So when it comes to the consolidated financial statement, only clause 21 of para 3 will be applicable. Otherwise, no any other para will be applicable when you do an audit of a consolidated financial statement with respect to Caro.
Yes, sir. Clear.
Any other doubts? Any doubts? Okay. If no doubts, so this was your Caro clause by clause that we discussed. Clause by clause discussion of your Caro. Now, para 4 of Caro says that, whenever there is a, adverse remark, you need to provide the details. Like we have seen clause by clause already, like how the adverse remarks are required to be reported. But this is something that is, that para 4 says that you need to state the reason for the adverse remarks. Any doubt on any of the part? This was your chapter number 7. Any doubt on any of the topic of chapter number 7? Any doubt?
सर क्या ऐसा हो सकता है कि मटेरियल अनसर्टेनिटी वाला जो पैरा है वो केवल सीएफएस की ऑडिट रिपोर्ट में आए?
See, it may come, because what will happen is, let's say for example, company is there, company is working perfectly fine, but to the group it is not material enough, and the entities which are material for the group are not performing, are also having material uncertainty paragraph in their individual audits. So it may happen that when it comes to the individual entity which is not material going good and operating effectively, you might not have a material uncertainty paragraph in that company's audit report. But when it comes to the consolidated financial statement, you might have. For example, again, same way, when a company is a holding company, at an individual or standalone level, the company might not be having any issues with respect to the material uncertainty, because the company's role is only to invest and get the dividend and interest. That's it. But when you consolidate the entity which was operating entity, or the entities which are operating and material entity to the groups, all such entities are doing losses, are having issues with material uncertainty. In that case, when you will prepare the consolidated financial statement, you will see a paragraph on material uncertainty.
सर कारो में कैसे रिपोर्ट होगा फिर वो सीएफएस
No,
की कारो में?
no, it will not be reported in the Caro, but it will be reported in the audit report.
Okay.
Audit report, the consolidated financial statement. Any doubts? Any doubts? No? So this was your chapter number 7. So we discussed sorry, We basically discussed the chapter number 7 and all the points. If you have any doubts, you can ask. Otherwise, if no doubts, then we can proceed to chapter number 8. Okay. Okay. So let's proceed to the chapter number 8 then. Let me open it up for you. Now, when I talk about chapter number 8, okay, what you need to do is, I hope you have the, the study material updated with you guys. So on the BOS portal, you will find updated study material for the chapter number 8. Because there is an update, and for the May 2025 examination, there is an update with respect to chapter number 8. Okay, so I would request everyone to have the updated study material with yourself. Now, what chapter number 8 talks about? If I discuss what chapter number 8 is about. So Ginny, April 2023 edition will not work. Reason because there were amendments in SA 800 series, and that is the chapter number 8. So we need to understand what is chapter number 8 and why I'm saying to have a updated study material. So chapter number 8 basically is consisting of your SA 800 series, SA 800, 810, okay, and your 805. There are 3 essays which are there. And these 3 essays were updated, okay, in 2024. So as a result, you should have the updated study material. That's the reason I'm asking you to have the updated study material based on the revised essays. Okay. I hope you guys are aware that how to download study material from BOS portal. Yes. Okay. So you can download, which is applicable to May 2025 exam. It is available over there. So you can go and, easily identify, in the section of May 2025 exam, and you will get the updated study material. Which I will also have, wait a minute, on my screen now. So this is the updated study material for the May 2025 exam that I will be referring throughout the session. So we have 3 important essays to cover. For the first time, you will be seeing, till now you have seen, in something with related to the till essay 700 in your intermediate also. But essay 800, 805, 810 are of specific nature. They are different kind of essays. Different kind of means, till now we were talking about audit of a financial statement, audit of journal financial statement, audit of journal financial statement. But now we will not be talking about audit of general purpose financial statement. Now our discussion will change from audit of general purpose financial statement to the audit of financial statement which are prepared as per the special purpose framework. We will be discussing now special purpose framework. Now, what is special purpose framework? Can anyone tell me what is special purpose framework?
The financial statement prepared on a specific basis on the requirement of any regulator or any contractor.
Okay. Anyone else? What is special purpose framework?
So, as compared to general purpose framework is for a user or public at large, and special purpose is specifically for the intended use of the intended group of the users.
Yeah. Okay. Yes. Very good. So, anyone else would like to answer special purpose framework? Okay, I'll tell you. Now, when I talk about special purpose framework, as correctly you pointed out, that when I talk about special purpose framework, it is designed to meet the specific needs of the user. It is not the general purpose financial statements that you present for all the users. Here, the users are specific. Here, the users are specific. It may be a fair presentation framework. It may be a compliance framework. But the users are specific or of certain categories. And based on that, you might have a different kind of financial reporting framework. For example, if I talk about, you are required to prepare your account on the cash basis for some creditors. You are required to prepare your accounts for some other regulator in some other way by allowing, disallowing some kind of expenditures. Or you are preparing your accounts for a particular contract. Now, which contract? Let's say you have a contract with a promoter. Now, let's say promoter is there or founder of a company. Now, founder went to venture capital firm. Okay, investors. Investors ask, okay, we will invest in your company when you will prepare financial statement in this way. Means I don't want a general purpose financial statement reporting all that stuff. No. For my use, what you will do is you will prepare financial statement where you will not consider these items as an expenditure. And you will consider only 10% of these items as an expenditure. Rest you will capitalize. For example, advertisement. For example, there are marketing expenses. You will not block your P&L with all the advertisement and marketing expenditure, but this is something kind of intangible as per the investor, and you have to take it in your balance sheet, and you need to capitalize for that.
सर यहाँ पे फिर इंडियाज का कंप्लायंस कैसे होगा फिर यहाँ पे?
It will not be there. That's why I'm saying it is a special purpose financial statement. When it comes to the NDS, it is general purpose.
Okay.
So that's why your special purpose financial statement requires an understanding of that special purpose. And when you audit a financial statement, which is based on the special purpose framework, at that point in time, you need to comply with SA 800. Getting the point? So that's why I'm saying, so whatever we were...
सर स्पेशल पर्पस फाइनेंशियल स्टेटमेंट के केस में केवल ऐसे 800 की सीरीज ही एप्लीकेबल होगी.
When you are doing audit, yes. And that is, there are specific scenarios. For example, when you are doing an audit of a special purpose financial statements prepared as per the special purpose framework, SA 800 will be applicable. When you are auditing only single element of that FS, means you are auditing only balance sheet, which is prepared as the special framework or special framework, or you are auditing only P&L, cash flow statement, which is prepared in the special purpose framework, SA 805 will be applicable. And when you are auditing on summary financial statements, which are derived from your audited FS, which is prepared under general purpose financial statement, like you have a general purpose, from there you are preparing a summary FS, which is again you are as an auditor preparing. Okay. So in that case, the summary FS derived from the FS which is audited by you earlier. In that case, you need to report on SA 810. So these are the specific scenarios, and each and every specific essay will be applicable in a specific scenario. Clear with this? So I hope you now have a basic understanding when these essay will be applicable.
Yes, sir, very much clear.
Okay. Now coming to the point about the special purpose framework. Okay, again back to special purpose framework. It is very much important for us before we enter or before we start any audit under SA 800 or 805. I'll come to SA 810 later. But if I start any audit under SA 800 or 805, the first and foremost thing for me is to understand that whether the framework is a special purpose framework or a general purpose framework. If it is a special purpose framework, then what elements make that framework as a special purpose? Means what differentiates this framework or requirement or list of requirements for preparing financial statements with respect to your general purpose. For example, I prepare a list that, okay, this is how you need to prepare your financial statement. I enter into a contract. I am an investor. I enter into a contract with a person, okay, with a person that I will invest in your company and will be invested till the time you prepare your financial statement with this requirement. I gave the requirement to him. He started preparing the financial statement. Now, there was no difference in the list which I gave and the, general purpose framework. Means I only listed down the Ind AS that were applicable or AS, requirements of AS. Will you still call that as a special purpose financial statement? Yes or no? Will you call that particular financial statement as a special purpose financial statement or general purpose?
General purpose.
Why? Why general purpose? Why not special purpose? He's preparing the financial statement as I am saying, but I have I have prepared my list based on the AS.
Sir, AS general purpose में applicable.
So yes. So now the question is, we need to understand what makes my general purpose financial statement or general purpose framework, or how the special purpose framework is different from your general purpose framework. On what criteria it is different? That is something I need to understand. Because that will give me clarity, that will give me understanding, okay, what is applicable with respect to your, special purpose framework, what makes it different from them. Are you getting the point? Okay. So let's start taking notes also on this particular topic, very important one. We will start with first SA 800. SA 800, that is special considerations. When you are doing audit of financial statements prepared in accordance with special purpose framework. Now there is a question. Last month, Delhi governor ordered to conduct a special audit of power distribution companies. What does this mean, sir? Electricity distribution companies are audited by CNAG. Then can these SA 800 series be implemented? See, now again I'm repeating. So when we are auditing the financial statement which are prepared based on special purpose framework, when someone is ordering, okay, do additional audit, special audit, so they are focusing on the audit of a specific areas. It is not so somewhere. Let's say, for example, your example that electricity company. No one told electricity company to prepare different financial statements. Did they? No. So they never asked electricity companies to prepare a separate financial statement. But what is happening is CNAG or someone else has ordered to conduct the audit, special audit, where they will check special criteria or something different, or maybe they will check in detail, in more detail. But in that audit, they are not focusing on some new financial statement prepared on some different basis. Are you getting the point? So when SA 800 will be applicable, when altogether you have different financial statements, something different prepared according to something new requirement, that is special purpose. But when someone is doing more detailed audit, I will not call audit for a special purpose. No, that is not a special purpose audit. Or audit of a financial statement prepared in accordance with a special purpose. No, that is not that. That can be a due diligence. That can be investigation. They are saying audit, but that can be a investigation also. Forensic accounting. There are multiple other assignments and multiple other standards that we will see. It can be agreed upon procedures, because at the end, it is auditors are not asked to issue an opinion. They are asked to issue a report whether this particular thing is happening or not. So we need to understand the type of assignment based on the details of that particular underlying assignment. Am I clear? Okay, great. Okay, so basically that's why I say it is very necessary for us to understand that when you do the audit, again I'm saying this is applicable. This is applicable when you are auditing the whole FS. So special consideration should be paid to audit of FS that is prepared. So to apply SA 800, there are conditions. One, there must be an audit engagement. Audit engagement. Number two, audit should be of full set of financial statement. Audit should be a full set of financial statements. Third, financial statements should be prepared based on special purpose framework. If these three conditions are present, in that case, I will apply SA 800, otherwise I will not. When I say full set of financial statement, it including notes, policies, schedules, whatever it is there. So full set of financial statement means including notes to FS. So there must be an audit engagement. Audit should be a full set of financial statements. These financial statements should have been prepared based on your special purpose framework. These three conditions. Then comes what is special purpose framework? As I discussed, when I talk about special purpose framework, that means a financial reporting framework designed to meet the requirements of specific users. So designed to meet the financial information needs. Okay. So the needs are financial information related of specific users. Now again, it could be a fair presentation framework, or compliance framework. Okay, it could be any of them. But when it is designed to meet the financial information needs of specific users, at that point in time, it becomes special purpose framework. Clear? Any doubts till now? Any doubts? Okay. Now, if you understood this much, means 50% of the standard has been understood. Trust me. 50 to 60% of the standard you have already covered. If you have understood this much amount. I'll tell you how. Because the moment I brought a word, this particular word, which is audit, I borrowed all the concepts that we have learned till now from SA 200 to 700. I have borrowed all the concepts that we have learned till now from SA 200 to 700 series. So whatever essay we have learned till now, all the concepts, whatever we have learned now, I've borrowed all the concepts. Now I just need to apply those concepts with a modified way in this particular scenario. How? I'll tell you. Let's say, for example, when it comes to the accepting the engagement. So whenever we start with an audit or we get an engagement, the first thing comes is in accepting the engagement. Now, what is tell me one thing, where the requirements pertaining to the acceptance of the engagement with respect to normal audit is enumerated. Normal audit, not specific audit.
SA 210.
Yes, very good. And in SA 210, there is one thing which talks about, okay, this should be available as a, before starting your engagement, this should be there. Then only you can start the engagement. So there is a term.
Agreement between the management and auditor upon the terms and engagement.
But there is something, a term which should be there. Then only you can initiate the engagement.
Engagement letter.
No. There is something else that is there. Come on, guys. This is
agreeing the terms of audit engagement.
No, but there is something that is required for the audit, like before only.
So identifying the scope and type of report that is to be given.
but there is a specific name is given for that particular scenario.
Objective of the audit.
So that is known as the preconditions for an audit. If you see essay 200, if you go back to that particular lecture, we are talking about preconditions for an audit. Preconditions means the conditions should already be there. That is the use by the management an acceptable financial reporting framework. That management is ready to use an acceptable financial reporting framework. Okay, on the basis of which the audit is being conducted. Okay, management agrees to their responsibilities of presentation and preparation of the financial statements. So determination of FRF, agreement on the management's responsibility, and to provide all information to the auditor is the precondition for the audit.
That means essay 200 compliance will be there.
No, 210. So it is part of 210.
Okay.
210 says that you have to look for the preconditions of the audit even before entering into the engagement letter. So before going for the engagement letter, the preconditions should be present. Now, preconditions specify that financial reporting framework, management responsibility, and access to auditor. Okay. Now, when I come to essay 800 or special audit or under special purpose framework, how would I check the preconditions? So the first point is determination of the financial reporting framework. Over there, it is general financial reporting framework. Fine, which should be acceptable. Here is a special. I just need to identify, as I said, what is special purpose financial statements or framework that is designed to meet the specific needs of specific users. Okay. Now, this is something, a framework designed to meet financial information of specific users. Now, what I need to understand is, number one, purpose of the preparation, purpose behind the preparation of purpose of preparation of FS. Like why you are preparing under special purpose framework? Why you have to comply with the special purpose framework? Number two, as I said, it is for the specific users. Who are these specific users? Intended users or specific users? Who are these specific users or intended users? And number three, how management determines special purpose framework. Simple. Now, this is something part of precondition directly. Over there, how management determines the acceptable financial reporting framework or general purpose framework. Here it is special purpose framework. Okay, criteria basically. Intended users and the purpose means why you are going under essay 800. What is the need and for whom? If you do these things plus you comply with essay 210's other requirement, accepting the engagement is done. Over. So when you comply with these three questions, that is a kind of a precondition over here, and other conditions which are there under essay 210, you are done with the acceptance of the engagement. Nothing new. That's why I say I'm borrowing the concepts which are already there, already discussed in the audit. because this is an audit only. I'm not doing something else. I'm not creating a rocket. or not a rocket science, but I'm doing an audit. So the concepts which you have seen till now of the audit will be applicable as it is. Although it is special purpose, so I have to tweak somewhere. I have to change a bit, but not, the whole concept will not go under change. For example, what is materiality concept? What is material as per SA 320? Can anyone tell me what was the definition of material under SA 320? What do you call a material, item? Come on, guys. How do you classify any item as a material item? What was the criteria given under SA 320? No?
Sir, if any item or misstatement is influencing the decision of the users of the financial statement, then we can consider it as a material item.
Absolutely correct. Over there, it was all the users. Now, in that definition, you need to change specific users. That's it. If an item changes the decision making of these specific users, it is materiality for the special purpose framework. So in case of audit of special purpose framework, if any item, any misstatement which is impacting the judgments of these intended users, in that case it becomes material for the special purpose audit framework. For example, SA 200 talks about ethical requirement, independence, correct? SA 200 talks about that all the essays relevant to the audit are required to be complied with either you comply full, or if you are not complying because it is not relevant, then you need to you need to either in the entirety you need to leave the essay. SA 200, remember, same ethical requirement, same independence requirement, same compliance with all the essays will be applicable for you, because this is an audit. I'm not doing something new. Now, SA 260. What was SA 260? Yes.
Communication with those governance.
Absolutely correct. Yes. Now, when I talk about those charged with governance, are those people who have the oversight responsibility over the financial statement. Means they are charged with the responsibility that they have to see the preparation and the presentation of the financial statement that is happening correctly. Okay. So they have the oversight responsibility. Management is the one who will prepare the financial statement. Those charged with governance are the ones who will oversight the whole preparation and presentation. Means who will monitor the management's preparation. Correct? Same way, my SA 260 will be applicable over here. But in this scenario, my those charged with governance just will go under change. Because now, whosoever is charged with the responsibility of preparation and presentation in the management, that will be my management part. And if someone is given a responsibility to have an oversight on the overall presentation and preparation of the special purpose financial statements, that will be those charged with governance for me. But rest of the things, that communication with those charged with governance, communication of independence, my audit plan, nature, time and extent, everything will remain same. Are you getting the point? So To the extent that is, a tweak, a change is required, I will make a change in the standard. The rest, everything will be applicable as it is. Any doubt till now with this? Any doubt? No? Okay. If no doubts, see, this is majority of the standard, I will say, we have done. Only one small part is there, which is this, with respect to the reporting. Because I told you, like when it comes to the, even, planning and performing the audit, it is same 315 and 330 you need to comply. But the only change will be that the planning, when I say risk assessment, I will do based on materiality. Materiality, the base of the materiality base will be based on these specific users, what they want to see. And my risk assessment will be accordingly. My designing of audit procedures will be accordingly. Everything will go in that direction. Even my SA 700 series will be applicable here, that the way I need to prepare my audit report, but there will be small changes in that I will be discussing in the next lecture. But majority of the portion is this, that all the concepts of the audit will be applicable over here, the way we have seen till now. Okay. I will also, Bansha, in next lecture will highlight the change with respect to the previous standard, because some more clarifications and some more information has been given. And there is a change with respect to the reporting part, so that I will highlight. Okay. If no doubts, then I would propose to keep the session till here, guys. Okay. So thank you for participating. Please read once the updated study material for the chapter 8 in the before next lecture, and then we will discuss the chapter number 8. So thank you, guys. Thank you for participating. I'll see you in the next lecture.
Thank you so much, sir. Good night. Take care.
Thank you. Good night.
Thank
Yes.